is how crazy it is. This is why I think it's like really important that I go over this with you and even probably just have this in the video. If we look at even the 1 day time frame, right now each of these candles are entire days. We can kind of see like that it kind of works the same way. It pays to know what direction we're looking to do our thing in. But for instance, here's one where this was the tippy top of a local move based on the 1 day candles. And then here was the essentially like the drop, right? Like this is the peak of negative price action. And so now I'm just going to show you. And this is just random. Like keep in mind, I didn't like plan this, but like look at how crazy FIBs actually are, right? It dropped. We had no real noticeable peak in price action. And then here we hit the peak of downward pressure, and then it retraces. And as we're kind of always looking for, if we're looking for the short, we just talked about it on this video. This is not the greatest one. And we even said that this is not like an amazing one, but maybe on a 1 day time frame, it's slightly better. And so, and especially after such a big drop, and if you're in a bear market or a downward sloping market, like you'd probably take a shot there and take a shot there.
Right.
And if it gets up to this 786, usually like if it blows past this, I kind of figure this thing might actually keep going up, and so I'm not gonna waste my time and money until I get some more certainty.
Right.
But I share all this to say, like, this one is the one that, if you look at how close it was, it's amazing that that wick right there was perfect on the spot on that orange. And it somehow, I really don't know how, somehow it works like that all the time. Look at that. Here's the bottom, right? If I just drew it one of these days, there's the bottom. And then magically, because this was a pretty intense downtrend, look, 3 different times it hit that red line, and that would have been the 3 different days in a row. That would have been the most amazing short entry. And in fact, you would have just successfully entered your short here and waited days, many days. And this is what I mean. Like if you land based on a daily chart fib, you enter something nice, then, and especially if you're doing low leverage. I mean, but this was really, really precise. This could have been 10x leverage, and it would have worked really great. And so if you look at like what that would have done, just to kind of have perspective, short on a 1 day chart, right? I'm just like, I have things to do. I'm not trading crypto all day, every day. Just a 1 day chart. I just want to have a good place to enter and exit positions. I mean, I could have had something like this, and I probably would have had the expectation that it would bounce off of this 200-day ribbon, right? Because that's the high, the close, and the low of the 200-day ribbon. So I would have figured, man, I'm looking at a 5, maybe an 8, but that's okay. I'm happy with that. And then this is what I mean, that sometimes you couldn't have planned for it, but this grew all the way to a 20, and it grew to a 20 risk reward ratio. It grew to a 29% peak, gain, and that's just trading spot. That's not any leverage. The moment you 2x leverage this becomes a 60% gain, and this is a 3% loss, that you're risking. And then again, same thing, you 3x leverage, that's probably where I'd stop. I would 3x leverage it. I'd risk 4.5% of maybe like whatever, it could be $10,000. I'm risking $500 out of 10,000. And if I'm successful, then I get 3 times this amount. And so I'm making, conceivably $9,000, right? Because it's 30% profit times 3. And so I'm risking 500 to now, granted, I probably wouldn't have nailed the bottom, so I'll be realistic. But I mean, that's kind of cool that is the that's the peak, is that this person in a perfect world this thing went all the way to where they probably would be there. In real life, what really happens, in my opinion, is this guy gets lucky and he does really well and he's trading that much. And he's like, oh my gosh, man, this is cool. My position is at a positive $9,000 ROI. And he doesn't take profit. And then it goes back on him. And then he still doesn't take profit. And, you know, who knows when he takes profit. But hopefully he either protected his trade or, as you can see, it retraced all the way back to about here. And he would have been like retraced back to a $3,000 profit, which still is not a bad day. Because if he kept on holding on to that, it would have even went lower. I mean, that's the crazy thing. If he would have had the discipline to hold even lower, you know, it's just amazing how far it could go, you know, the 40 and 50% range.
How long are you drawing the FIBs down? Like, how many are usually doing it just over a day? One day?
What's that?
24-hour cycle?
What's the question?
When you draw that FIB, the FIB tracement,
right,
from the high to the low or the low to the high, how long are you typically looking at that? Over how
it just depends, right? Like if I'm looking for my entry into a really, really long bear market, right? Like let's just say,
got it. Okay, so if you're looking at it longer, then you'll place it longer. You'll look at it over a longer period of time.
Yeah, like if I want to know when should I get back into Bitcoin, or what is it, Uni in this case, after this long drop, I may look at it, you know, like here. I'd say, okay, you know why I'm interested here, and I'm looking at it maybe on this day. I'd say, okay, I can already see the top. That's really obvious. Now I'm looking for like, if I'm going to enter a short, where am I going to enter it? And so then I'd go, okay, this at a certain point, this became like a clear bottom, especially days later when it started breaching that line. You could easily get confused and be like, I mean, at the beginning, it would have been here. But what's crazy is it works there. It works like just fine. Like it actually went here down to here, and then it went into the green zone. And as long as you're doing low leverage, you'd have made it. If you tried high leverage, it's hit or miss. But if I caught it on this day and I'm looking at it on March 26th after it's already kind of bottomed out, and I'm like, okay, am I going to short this thing or what am I going to do? Then I would kind of like just draw it out and I would look again. And so here again, it's really close to this range here. And I probably would have been ready for it to go here and short it here too. But it works on all time frames. It works across everything. And I think that's what I wanted to mostly have in this video, and I wanted to share with you, is that I literally I could literally take this and I could go, I'm going to look at the monthly. And I could like, I don't know, you know how, but I could kind of like make it work, I bet. I go here, and then I like, here's a good place. It went up to this. And then when we finally found the bottom, which was right here, right? We finally found the bottom. And then it's like, look, it was a really intense downtrend. So that's what I mean when I say the red often doesn't work. But in the case of an altcoin in a really intense downtrend, for people looking to short it or get out of it, that's their best opportunity, because if they don't, then they have to like hope that it makes it up here. So it's a little more likely to happen there. But I think that's amazing, because that's a fib retracement on like a year-long, you know, batch of price action from like August of 21 to August of 22. And then it landed right here on this, pretty much on this, you know, lower fib line. And so that's kind of, you know, the power of these things. If I take it here and I did the same thing and I go, okay, I'm looking for what's going on with Uni now, and I own some Uni, so like I should probably like care about this. It's low. I'm not planning on selling it or anything, but you know, like where could I almost count on it running into a shitload of down pressure and sell-offs and you know, a bunch of people shorting it for a while? probably all right in here, you know. So if I'm trying to get out of uni, I would want to get out of it right here around, you know, I'd sell some of it here at like 733 or something just before that. And if it made it this high and I wanted to get out of it, then this is another level I would consider selling. And so what's just kind of interesting is these little, you know, let me remove the pressure lines. Those levels, all of these levels, each and every one, especially the bigger ones, like on the monthly or the weekly, but they just become something that you can utilize very similar to the way we utilize pressure lines. And so you know that if price action is coming from below, this would be a dumb place to long. You're better off waiting until it's up here and it's proven that it's got the potential to break that line. And then it's a great place to long until you get here, which is another great place to take profits. Again, if you're using the monthly scale. And then conversely, if uni goes up here, this is an amazing place to probably short. You know, you'd have a stop loss and everything still, but it's like a great place to short and maybe consider shorting it. Just like it did here, you know, and just like it did here, apparently. So it's just really weird that it works and, you know, so many people use it. And I think when you combine that with the dots and all the algos that we have, it makes it so much easier to find intelligent entries and to find other places where we can expect to see, you know, supports and resistances show up. And then you can avoid longing just under those resistances, and you can avoid shorting just above those supports, and you can avoid FOMOing into you know, trades like this one here, the ADA trade that we were messing with, right? Like it may feel like it takes forever, but it's almost like a guarantee that it will at least make it here. So you could literally enter along here and probably be upside down for a little bit. Maybe it's not so bad if you just use 2x leverage. And then if you get here or here, these are just kind of like my favorite ones to, you know, to have something like a 5x leverage or just something a little more powerful and potent. But I still monitor the asymmetry, make sure that I'm comfortable with whatever I'm going to lose in case I do lose. Don't be too greedy. Have my entries, you know, just above the line to make sure that I'm included, and then make sure that my asymmetry is somewhere reasonable, usually between like 7 risk reward ratio and 15. If it's lower than 7, it's probably not a good enough trade for me. Like if it's 4 or 5, it's probably not a good enough. Like it's too much risk for the reward. That's the whole point of doing that. And then if it's higher than 15 or if it's higher than 20 or something like that, you've got one of two things that are probably wrong, and that is you're being overzealous on how far you think it'll go, like how far the take profit will go, or you're being too conservative on your stop loss, and so you're highly likely to get stopped out. So those are the two reasons usually that we'll see a bunch of extra risk reward ratio. We're like, oh my gosh, this is a great trade. I got a 30 risk reward ratio. It's usually because it's not real. It's, you know, we're giving it a little too much credit somewhere and we have to figure out where. But if you're somewhere between 7, 8, and 13, like those are, I think for what we do, really nice sweet spot. And I just saw that, so just so you see this too, for your trades, kind of a fun thing is that the Cardano just opened up with a green circle, green dot. And so now, like we were talking about in the very beginning, this is like usually just a really beautiful setup. So that's kind of a fun place to go in and say, okay, you know what? If I have all of that going, then That would be my one reason for market ordering into something.
Got
And
it.
and that's where I would do still, because it's still FOMO, right? Anytime you FOMO, it's probably risky. And so if you did market order into it, just do it with a smaller amount of capital and lower leverage. And that way, when it
Okay.
goes upside down, because it probably will still go to this orange at least. So if and when it goes upside down, you're not really stressed out because you only market ordered in a little bit, right? Like I could do 100, or let's say 250, and then let's say I do something like much less greedy and crazy, and I just go, you know what, I'll do something like that, and I'll just do 250, and so maybe that's where I open my long, because I like all that green, and so I might say, boom, I'm gonna open it up, but it's not gonna move fast, and in a way that's by design. If it goes against me, it's not going to move very fast. If it goes in my favor, it's also not going to move very fast. So now I can go kind of like take it easy with life and probably check back in just a little bit and move my stop up, and this could be really, really probably pretty liberal with a -1. And it actually has to move. It actually has to move, probably quite a bit on a 30-minute chart. It has to move quite a bit to hit my stop loss, to where I would lose $2.50. So like whatever that psychology of money is to the individual is totally up to them. But I'm just kind of wanting to make the point, like lower capital and lower leverage. Anytime that you feel like I'm FOMOing into something, that's a really great practice, is to lower your capital, lower your leverage, and make sure that you have your loss accounted for. Like, okay, I FOMO'd in, this ought to be something, but worst case, I'm losing 1%. I can handle that, and then you just kind of go from there.
Let me play with
And you
you. I'm
can,
gonna
and
play
obviously
with
once it goes up, you can move it up too. You can even get like more protective. Now, my worst case scenario, I'm losing 0.25%, right? So you can get as ridiculous as you want to get, but I wanted to share that with you because I hope that in the future you never have like 50% stop losses anymore. You just have more capital in play, and you're only willing to give up like a few percent, 2 or 3 maybe percent of a bigger position. That way, when you win, it's more fun because you're winning something meaningful, and when you lose, it doesn't really matter.